Hello and happy July 20th. I'm Kevin Davitt of CBOE Global Markets, and this is Volatility 411. Now, the VIX Index is measuring below its 200-day simple moving average for the first time since February on a closing basis. That's as of Friday. Anecdotally, the last VIX Index closed below the 200-day was February 19th of this year, which marked all-time highs for the S&P 500 index. In fairness, plenty of people consider technical analysis of the VIX to be a faux pas. Now, the S&P 500 index has been chopping around in a fairly narrow range over the past handful of sessions. Since the middle of last week, the SPX has meandered between just below 3,200 to as high as 3,240 this morning. Consequently, the VIX index is measuring right around 25 as short-term historical vol measures for the broad market are declining. In the options world, looking out to the November cycle, there was a 26-21 put 1x2 spread that traded for a $1.08 debit. Ratio spreads are fairly typical in VIX options. Also of note, more than 30,000 of the September 20 puts traded for 32 cents. That's about half of the current open interest on that series, and we'll be able to see tomorrow if that was a closing trade. Earnings will continue this week with 400 plus companies, big and small, reporting everything from Arrow Financial to Zions Bancorp. So, as usual, plenty to keep our eyes on. July VIX futures and options will expire this week. Earnings and, of course, coronavirus headlines will likely dominate. Finally, there's just over 100 days until the next U.S. election, which is historically when people start paying attention. That's Vol 411, and thanks for tuning in.